once more welcome to my channel. We are going to continue with the income method of measuring national income. We were doing value added method or product method in the previous classes. Now after doing income method and expenditure method, we will go back to the value added method while doing the revision questions. So according to income method, it is the total of factor income generated within the domestic territory of a country by the residents and non-residents. So we have already seen in my notes and in my previous classes, I have already explained what is meant by factor income. It is the income generated by rendering the service by the factor inputs. Which are the factor inputs? Land, labor, capital and entrepreneurship. Okay, land derives rent, labor gets wages or salary, capital gets interest and entrepreneur gets profit. So the total factor income generated, that is the income generated within the domestic territory of a country by the residents and non-residents, and when we add net factor income from abroad to this income, factor income, we will get national income. So first of all we are going to see the components. So, components of domestic income. According to income method, which are the components? Compensation of employees plus operating surplus plus mixed income. We will get NTP at factor cost or domestic income. Okay. So, compensation of employees, operating surplus, mixed income, COE is equal to compensation of employees. OS means, OS is operating surplus. Then mixed income. By adding these three, we will get domestic income. NDP at factor cost or domestic income. This income method is otherwise called distributed share method or factor payment method. Factor income is factor payment. Income received by the factor inputs. Payment given by the firms to the factor inputs. That is why it is factor income and a factor payment. So, COE, compensation of employees plus operating surplus plus mixed income. We will get domestic income. To that we have to add NFI. So, when we add NFI, by adding these three, the first, second and third component, COE, OS and the mixed income, we will get domestic income. To that we have to add net factor income from abroad in order to get national income. Now we are going to see what is COE, what is OS and what is mixed income. Compensation of employees. COE. They are wages or salaries in cash, money. Second one, wages and salaries in kind, means the compensation received by the employee from the employer. It can be rent-free accommodation, free education to the children of the employee. Then employer's contribution. It is not employee's contribution, it is employer's contribution to social security fund. For example, the employer is giving provident fund. That means a percentage of the provident fund is given by the employer, a percentage by the employee. So whatever is contributed by the employer to the provident fund, it is a compensation of employee. Then retirement pension. It is a part of compensation of employee. Retirement pension is a part of this employee's contribution to social security, but old age pension is not a part of this component. Old age pension is a transfer income. So that is an income received without rendering any service in return. Okay, so kindly don't confuse between the two. Retirement pension is after providing service for a fixed time. An employee after retirement is receiving an income. So wages, salaries in cash, wages, salaries in kind, employers' contribution to social security, they are the components of compensation of employees. Okay, whatever contribution is given by the employee is not taken into consideration. Whatever compensation, whatever contribution is given by the employer to the employee only is taken here. In the question paper, in the question for the exam, sometimes you won't see compensation of employees. Instead, you will see these components. So you have to add to get the value of COE. Then we will come to that while we are doing the numericals. So these three are the components of compensation of employees. Now, what is operating surplus? Operating surplus. Operating surplus is equal to rent plus interest plus profit. By adding these three, we will get operating surplus. So instead of operating surplus, sometimes rent, interest, profit value will be given. Sometimes only interest and profit will be given, rent won't be given. So whatever components are given, you have to add it in order to get operating surplus. But if operating surplus value is given, again rent, interest and profit is given, kindly don't add it again, it will be double counting because the value of rent, interest, profit is included in operating surplus. So sometimes royalty also will be given. So it is to be added with the rent. So according to income method, NDP at factor cost or domestic income is equal to compensation of employees plus operating surplus plus mixed income. Operating surplus is equal to rent plus interest plus profit. If royalty is given, it is to be added with the rent. So rent, royalty, interest, profit are components of operating surplus. What is rent and what is royalty? Rent is that part of national income which arises from the ownership of land and building. Rental income includes rent of let out land as well as imputed rent. So, imputed rent of owner occupied house is calculated on the basis of the market rental value of the house if it is given for rent. So what amount, what value it will fetch if it is given for rent? It depends on the rent of the similar type of land or building in the same locality. So what is royalty? Royalty refers to income received for granting leasing rights of subsoil assets. For example, owners of mineral deposits like coal, iron ore, natural gas, etc. can earn income by giving rights of mining to the contractors. Royalty is also payment for the use of patent, copyright, trademarks, etc. If the music composed by someone is used by somebody else, the person who is using that music should get the consent of the actual composer. And the actual composer is to be given an income for using his music. So these are a few examples of royalty payment. So next is interest. It is the amount earned for lending funds to the production units. It also includes imputed interest of funds provided by the entrepreneur. So it is the income of the factor input capital. So next is income from entrepreneurship, that is profit. It refers to the income generated from the entrepreneurship. Profit can be further categorized into dividend, corporate profit tax and undistributed profit. Dividend is distributed profit. Next is mixed income, income of self-employed workers like farmers, barbers, tailors, carpenters, doctors running their own clinic, etc. And unincorporated enterprises like small shopkeepers, retail shops. They do not maintain proper accounts and do not generally hire factor services from the market, but use their own resources like land, labor, capital, etc. So it becomes difficult to classify and estimate their income distinctly among rent, wages, interest, and profit. So it is called mixed income, that is, income of the self employed. Profit has three components. One is distributed profit, that is dividend. Okay, distributed profit is the profit shared among the shareholders. Undistributed profit is otherwise called net retained earnings of the firms. What is net retained earnings? It is this part of the profit is not shared among shareholders. It is kept for future use. Third one is corporate profit tax. That is tax paid by the firms to the government. Okay, so these are the three components of profit. So sometimes the term profit will be given or these components will be given. If both are given, if profit is given, there is no need to take these components. But sometimes these three components will be given, so we have to add it in order to get the value of profit. Okay, now we go back to mixed income. Mixed income is the income of the self-employed people. There are many people nowadays in our country, in many countries of the world, who are self-employed. So, a self-employed person, his income in the form of wages and the rent of his own building, his own land, these are mixed. We cannot differentiate because in compensation of employees, the income is fixed. Fixed salary, fixed wages. But in mixed income, that is the income of the self-employed, it is not fixed income. And we cannot say that they are in the organized sector. The income of a farmer. A farmer may own his own land. From there, he is getting an income. So he owns the land and he does the farming on that land. So his wages, the rent, everything, that value is included together. Then a barber, small shopkeepers, they own their own, if they own their own property and if they derive an income by working, that is self-employed, they are not working for someone else. That person is his own or her own boss. So their income in the form of income from property and wages, it is mixed income, the income of the self-employed. So by adding COE, mixed income and the operating surplus, we will get domestic income, and to that we have to add NFIA, we will get national income according to income method. So we will start with a simple numerical. Calculate national income. National income is NNP at factor cost. This I have already explained earlier, the standard unit of national income, NNP at factor cost. COE, compensation of employees given, operating surplus given. COE, we can take it as the amount is given in rupees, in crores. These are the particulars. Then COE value, we will take it as 150 crores. Operating surplus is 100 crores. Mixed income is 50 crores. NFIA given directly. What is NFIA? Net factor income from abroad. Factor income from abroad minus factor income to abroad. So NFIA it is negative 10. So how can we calculate national income? All are given directly. So it is easy to calculate 150 plus 100 plus 50 plus negative 10. What is answer? 150 plus 100, 250 plus 50, 300. Then minus 10, rupees 290 crores. Very easily we can derive if all are given directly. Okay. So by adding these three, we will get domestic income. To that we have to add NFIA. We will get national income. Now we move on to the next numericals. Notes are attached herewith. Please refer.